And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story, the whole enchilada. It's the Lance Roberts Show, presented by Clarity Financial. It's life, money, and sweat equity. Now, welcome in to the Lance Roberts Show.
And welcome to the show today. It is 3 o'clock as we wrap up the trading day. And today was, well, the exact inverse of yesterday, which was after the market sold off 16 points at the close yesterday. Strong rally today. Right now we're closing out the numbers. The S&P is up 60 points, 59 points right now, and the S&P 500. Dow's up almost 600 points today, up 2.15%. NASDAQ is up large as well today. Again, a big rebound kind of really across markets. And really we see this now. I talked about this specifically yesterday when we were on the show. I said, you know, where we are right now is that we were flirting with this 200-day moving average, and that's been really key support for the markets going back for the last couple of years. And I noted yesterday that it was going to be important that we maintained this support. And again, just the simple break of the 200-day moving average, and this is what happens with a lot of traders, and they break the moving average, and then they go, well, I broke the moving average, I'm stopping out, I'm selling all my stuff. And then immediately what happens after that, the market rebounds, and then they're upset and because they sold at the low, and now the market's rebounding, and they're upset because they sold, and well, technical analysis doesn't work. Well, this is often the case people say. So why use technical analysis? It never works anyway. And it's specifically because you have to understand how technical analysis works. By the time that you break these levels of support, markets are very oversold. And something we're going to talk about in the next few days is exactly what overbought, oversold means in more detail. But the point here is that by the time you have all of this selling, markets are oversold. In other words, most of the people that were going to sell have sold at this point, and you're now down to the point of where people that are trapped in positions they don't want to sell, they're holding, and then there's a limited supply of sellers and more buyers willing to buy, and that starts to bring prices back up. So the problem is that when you get down to these levels and you're breaking support levels initially, you're generally oversold enough that you're going to get a bounce. Now, it is always the direction and magnitude of that bounce that determines whether or not the sell signal that occurred is valid or not. And currently, we are rebounding back above that 200-day moving average. But again, it's not just where we finish up on a daily basis and as we're managing money and managing portfolios. What happens kind of in the middle of the week generally isn't as important as where we finish up at the end of the week. Let me show you something here. Moving to a weekly basis, we see some of the same things here. The market was holding on to this long-term moving average on a weekly basis. We bounced off that level today. Again, didn't really violate it. Markets are still in a bullish trend, which is why we haven't recommended selling and moving a lot of money to cash. Even though markets have been under pressure, the market's not done anything wrong on a weekly basis yet to require that portfolios have more cash in them and that reduce our risk to equities. Also, as I said the other day, we've got very oversold on a weekly basis. And again, what this yellow squiggly line means up and down is simply from when you move to very overbought conditions to very oversold, and we're currently very oversold. So we're expecting a bounce here. That's what we saw today. There was a lot of headlines out today that stocks are up today because of strong JOLTS data. We never paid attention to JOLTS data. Job opening labor turnover surveys, we get them every month, and generally we don't pay attention to them. But today, because it's bouncing, and that was the one economic report out today, that must be why stocks are up, because of strong JOLTS data. No, it wasn't. It was simply because we were extremely oversold. There was a dearth of sellers. There were more buyers than sellers. And yes, we had some good economic reports earnings reports out today that did help kind of assuage some of the concerns over earnings outlooks, at least for today. But again, we're just now getting into earnings season. There's likely to be a lot of negative kind of talk about forward earnings because of tariff issues and higher interest rates. So again, most of this rally today was simply a function that the markets were very oversold. We were due for a bounce. We've been talking about that for the last couple of days. Let's step this out one step further. This is a long-term monthly moving average of the S&P 500. This is 2007, 2008 correction back over here. Again, we haven't done anything to violate the bullish trend. Again, no reason right now to move a lot amount of money to cash. So what should you be doing here? Well, that's the question that we ask every day and things that we talk about on a regular basis, which is simply looking at the positions that you own and make sure that they're performing the way they're supposed to do. Currently right now, a lot of the markets are working fine. The bigger concerns have remained really small caps, which have been under a lot of pressure. They broke their 200-day moving average. They have not recovered back above that 200-day. There has been a sea change in small caps relative to large caps. One of the areas here we're going to be looking at closely by the end of the week, if small cap can't get back above their 200-day moving average by the week's end, this is going to be a signal that suggests reducing small caps in your portfolio in favor of more large cap exposure, which is still performing fine. Mid caps also look very similar. Big decline below the 200-day moving average for mid cap stocks, unable to get back above that 200-day moving average. This suggests, again, that there's been a sea change to the momentum of mid-capitalization stocks. Expectations here are a reduction in mid-cap in favor of large cap also in portfolios. Again, not reducing our exposure to the markets, just changing where our exposure is located. Right now, markets are moving more towards large cap and really seeing some movement towards value in the large cap space, momentum becoming kind of a laggard. First time we've seen this in a while, but this could suggest a bigger, broader topping process for the market as momentum is beginning to show some signs of weakness. On individual sectors, we're watching the major technology stocks, the FANG stocks, continuing to lag here a bit. Microsoft has been lagging. Amazon, big move up today, but still a big downtrend in the markets. And Amazon has broken their long-term uptrend as well. A bit more of a bearish pattern for Amazon, one of the big leaders of the markets. Apple continues to kind of work in this topping process. We've got a nice left shoulder for Apple ahead and potentially working on a right shoulder. A violation of this neckline at 276 on Apple is going to be much more important about a potential decline in Apple. Taking a look at some of the stocks particularly in the semiconductor sector, NVIDIA below its 200-day moving average, testing that level today. And of course, also looking at KLA-Tencor and Micron. Both of these have been in big declines here. These are positions that we're going to be looking to sell, remove out of portfolios, simply not performing the way they're supposed to do, looking to find some support and some investments elsewhere to put that money to work. Looking at also banking sectors have continued to really underperform. Financials across the board. This is JP Morgan. JP Morgan continues to grossly, along with really the entire banking sector, really continues to underperform the major market itself. So again, the point here is that there has been a change in the dynamics of the markets. The rally today was very strong, but look to start moving money into sectors that are leading, moving from mid cap and small cap into large cap, because that's where the movement of the market is going currently. Take a quick break. We're going to come back, pick up with Michael Liebowitz, CFA, talk more about today's market action, and of course, get by our website at lancerobertshow.com, get our latest podcast, sign up for our YouTube channel, and of course, send us your questions and comments. That's realinvestmentadvice.com. We'll be right back.
Get daily investment news you can use, delivered at the speed of the internet. Sign up for Lance's newsletter now at lancerobertshow.com.